Hey, what's going on, guys? It's Mike back with another video, and in this video I'm going to go over when to buy and when to sell when trading the Forex market. Okay, I did a big video on this in my previous videos way in the past. I did a part 1 to this. If you haven't checked that out, definitely check that out. I'll leave the link to the video up on the screen right here for you guys. Especially if you're new to my channel, definitely check it out, man, because I dropped a lot of good gems in that video, man, honestly. And a lot of this stuff I'm just speaking from experience, what I've learned that hasn't worked for me and what has worked for me, and maybe it could work for you guys too. Okay, so before we get into the good stuff, you guys already know what to do. Make sure you please comment, like, and subscribe. Turn that notification bell to become a part of my notification to know when I post new videos. I'm bringing a lot of great value to a lot of people on my channel, whether it's trading, whether it's fitness, or whether it's just strictly inspiration. I want to inspire you guys to be the best you can be, regardless of what gift you have or your purpose or whatever the case may be. Okay, so but without further ado, let's get right into the video. So right off the bat, guys, we are on the USD versus the CAD. Okay, the United States dollar versus the Canadian dollar. Okay, very simple pair to trade. This is one of the major pairs, and I want to show you guys on what I like to do. Okay, so a lot of my videos, I always tell you guys, make sure you identify the trend first. If you can identify the overall trend first, it's going to help you towards whether you want to go for buys or whether you want to go for sells when you're trading in the market. And this example, this trend is a buying trend. Okay, we are in an uptrend in this example. And what does it mean when you're in an uptrend? It makes it all it's saying is that price is continuing to make a series of higher highs and higher lows. Okay, well, now you're thinking, well, Mike, okay, well, where do I get in though? Like, where do I buy? Like, can I sell in this market? And I want to say this, if you go and buys in this sort of market, the buys are going to allow you to profit a lot more than the sales would, because when you're buying in this sort of market, you're going along with the trend. If you're selling in this sort of uptrending market, it's going to be a lot shorter. Not saying you can't do that, but there's levels to it. You know what I'm saying? So we're just going to go over the high-low areas and how I like to break down that certain area to find my entry. Okay, so it really starts with what kind of trader you are. I know you guys see me draw have the Fibonacci drawn right here. This is the main low, and this is the main high up here. Okay, very simplistic. Even without the Fibonacci on, it's still the same thing. Like, price retraced, and it's going to retrace, and it's going to stop at a level. You don't know which level it's going to stop at. We can only guess based on price action. And to the beginners, when I say price action, I mean when price is not only hit an area as a resistance, but it's also hit an area as a support. If you're having trouble finding those areas, switch to the line chart, and you can see where prices ticked from that area, consecutively. Okay, so what we're gonna do, we're gonna put that Fibonacci right back on. Okay, and we're going to take a look at this area. Okay, so right off the bat, I do pay for TradingView, thank God, so I can back test this and show you guys how price reacted when it got to this level. So first off, I always go over higher time frame levels. You have to keep in mind, if the area of support is a higher time frame level or not. This is a high level. This area holds a high level of liquidity. If you go to the daily chart, you can see not only has price hit as a support right here, but it also has hit as a resistance, okay, in the past. These wicks that you see on the daily, once we go to the 4-hour, you can see that those are basically candlesticks in this area. Okay, so the lower you go in the time frames, the more information you're going to get, which is great. It's great. Okay, it's great. That's how simplistic you want to look at it. Okay, the lower you go in the time frames, based on the higher time frame, those wicks are just going to look like candles on the lower time frames. The lower you go, the more candles you're going to see. That's all I'm going to say. Just keep that simple. Okay, so if we go back to the daily, like I said, this was a strong level, and based upon our 4-hour retracement, price is pulling back to the 78.6 level. Okay, and I have my fib set up like this. Everybody has their fib differently, man. Some of you guys may not have 78, 88. Okay, it doesn't matter. You can add these numbers if you want. I'll just do this for you guys so you guys can see it. These are my Fibonacci retracement levels. Okay, this is how I have it. And in doing so, this 78.6 retracement level holds significance because of this area of liquidity that we just went over. Okay, so now this area holds a level of importance. Now I see that, and I don't see price breaking this level. Okay, I got that set in my mind. I don't see price breaking this level anymore, but I feel like it's going to reject it, and then possibly we can take this we can take this opportunity to the upside. Okay, so right off the bat, you know, I've noticed in my experience with trading that, you know, back then I tried to get in based upon the 4-hour candle. Like, price is selling hard based on this bearish candle, and it's selling and selling and selling, and then I would try and go to the lower time frames like the hour at H1 to see if I can get in an early opportunity, and then put my stop loss behind that level. Now in the past, it hasn't really helped me doing that, because if that 4-hour candle is still bearish and then I get in early based on the 15, 5, or 1 minute, vice versa, you can see the 5 minute is already showing, you know, that buyers are starting to come into the market. Okay, so with the 5 minute, you may get an earlier entry back here. You could be this person. You may see the opportunity. You may be so confident in this move and how it was going to reject this level that you may get on the 5 minute, and you may just get in on this candle right here. Okay, so I'm gonna label this minute 5 for us so we can see. Okay, so minute 5. Oops, sorry. First entry. Okay, that's first trader entry right. He wanted to get in early. Okay, the next trader is like, okay, well, you know, I still kind of, you know, I kind of want to wait. I want to wait for a higher low to form on the 15 minute. Okay, so what if we play this out a lot more? Boom. The next trader wants to get in here. He sees that engulfing candle closed based on the 15 minute. He wants to get in right here as soon as this new candlestick opens. Okay, so we'll do 15 minute. All right, 15 minute entry. Now if you go to the 30 minute, which is more closer to the hour, you may have entered there as well too. Okay, you may have entered there as well, and you would have had a nice opportunity as well too, because you got it earlier. And I'm gonna take this off so you guys don't get confused. So we got minute 5 entry, minute 15 entry, and you can see what kind of position you would have been based on that entry. Okay, so this is how I'm gonna do it. This is minute 5 entry for you guys. Okay, minute 5 entry, and we're gonna put stop loss below that level. And then this is the minute 15 entry, stop loss, minute 15, minute 30 entry. Okay, and I'm gonna put that as well too, so you guys. All right, very simple so far. And then if you wanted to be even more conservative, because you see on the H1, you know, it hasn't done that retest that we wanted just yet. You know, these are just bullish candles based on the H1, but because we were so confident in that level, you know, as an aggressive trader, you know, you wanted to get in early. Okay, so let's play this out. Okay, and you see within those moves that we just made, 5 minute and 15, you can see what kind of position we're in based upon us understanding how to go down to the lower time frames. Okay, so you got 21 pips stop loss, 27 pips stop loss. Now let's see what happens if you wanted to be the more conservative trader and you wanted to wait for that 4-hour candle close. Boom, you waited for that 4-hour candle close, and you can see what happens. Okay, so now the 4-hour entry would be right here on this candlestick open. Okay, or I've seen some or it doesn't have to be as soon as it opens, but some traders may do that or whatever. Some traders may wait and then wait for it to pull back and then come back bullish. Some traders may just enter in right off the bat. Okay, so we'll do H4 entry. Now with the H4 entry, it's more conservative, and on top of that, it's more guaranteed. Okay, so all of this whole bullish candle based upon the 30-minute, 15, and 5-minute entries that we made in the past right here, all of that was just noise compared to the bullish 4-hour candle. But now it closed, and now it's guaranteed now. Now price has confirmed this is an area that it's rejecting. Okay, so the 4-hour entry is up here. Okay, 4-hour entry is up here, and then we have our stop loss, same sort of area, guys. All right. So I like to have my targets based upon the 4-hour. That's how I like to get my targets. And sometimes I can hold that long, to be honest with you guys, but sometimes I just can't. Okay, maybe some of you guys, you just can't hold that long, and you're not trying to do that. Okay, and mind you, this is not easy to do at all. It's not even that easy for me, because the easy part for me is getting the entry. The hardest part for me is how long to hold the trade. How long can I hold this trade before it either hits my take profit or my break even? Or there was times where I wasn't even doing break even because I wanted the trade to just play out. So this is something you have to consider. Maybe some of you guys may be fine with a 1 to 2. 1 to 2, something like down here. Maybe that's like 26 pips. That's almost a 1 to 1. Maybe some of you guys may be better with a 1 to 3. But maybe some of you guys don't mind holding. You know what I'm saying? Because you want to always consider this when you're trading. Okay, so when you get that entry, there's only a few places. There's only a few ways that the trade is going to play out. Okay, this is how I try my best to think about it. Because if I don't, I'll get scared and be like, I'm getting out the trade. Okay, listen. Once you put that stop loss in, that is your risk. Whether you risking $100, $1,000, $50,000, $100,000, whatever the case may be. When you put that risk in, leave it alone, okay? And then you got your take profit. Price is either going to hit your stop loss, or price is either going to hit your take profit. Or once you go up heavy enough, maybe you put your stop loss, because I was just talking to my friend about this. He just passed his trading challenge. My friend just passed his trading challenge and made it to tier 2. Man, God be the glory towards him, because that was powerful. That was inspiration for me, because I've been trying to pass tier 2 for the longest time. Okay, he said he risks 1%, and once price hits around 1.5%, he'll move his stop loss to break even. Or maybe you guys, once it makes that higher low or whatever, then you move your stop loss to break even. Or once it hits your TP1, maybe your TP1 is a 1 to 3 or 1 to 2, then you move your stop loss to break even. Or some of you guys may, it may hit 1 to 2, 1 to 3, then it keeps going, then you move your stop loss from back to the back to where your 1 to 3 or your 1 to 2 is. So you're guaranteed that profit. Whatever you want to do, you have to have a set of rules, because you do not want to get in these trades trying to figure out what you're going to do next, or how you could do this trade better, or how you can make the most money out of this. Because either way, as long as you make money on the trade, you are good. If it hits your stop loss, that's just what your risk was, okay? The biggest thing is getting some sort of profit out of the trade. That's what I've noticed has helped me pass tier 1 of my challenges, is just trying to get some sort of profit out of the trade. Maybe you get risky like this to hold hold the trade until it hits target all the way. If you up so heavy in profit because you've been making 1 to 2s, 1 to 3s for the last couple of trades you've been taking, maybe you're comfortable enough to just let just one trade just ride out like this. I don't know. I don't know you guys' psychology. I don't know your tolerance level. That's something that you got to find out for yourself as well too. And I wanted to discuss that in this video, because this is something that I come across every single time. You guys see me draw these charts out. Like, I can draw the chart, I can look at a pair, I can analyze it like in a couple minutes. Like, skill is not a bad thing for me. Like, I understand what I'm doing, but the hardest part in this game is psychology, not getting greedy, keeping your plan in mind, like knowing what you're trying to make, what you're trying to do for the week, for the month, whatever the case may be. Maybe some of you guys don't want to mess with the trading firm account. Maybe you guys want to do a live account. Some of you guys may not want to do a live account. You don't have that much to use in a live account. $100, seeing chump change here and there on your profits is not something that's really going to do it for you. So keep this in mind, okay? And you can see the difference with the entries too. Like, it's 20 pips, 27 pips, 44 pips. More conservative, mid-aggressive, very aggressive. That's what I mean when you go down to the lower time frames, okay? So definitely keep that in mind. And I know you guys, if you haven't seen my Fibonacci video, definitely check that out. I'll leave the link to that up here on the screen as well too, because I go over me targeting my negative 27%, and you can see how dramatic that is. Like 20 pips, 20 something pips to gain 258 pips, or even the 4-hour entry, 44 pips to gain 234 pips. They're all good, bro. They all good trades. But what is your tolerance level? You know, how patient are you? And that's the biggest challenge that has not only been for me, but I know how it can be for you guys as well too. So that's why I like to make these videos, because it's not just helping y'all, it's helping me too. Because hearing myself talk repetitively like this helps me understand that, okay, Mike, you just talked about this in your video. Why are you not doing it? Or you just talked about this in your video. Why are you doing this? You need to be doing that. So it helps me, guys. You guys commenting helps me as well too. Man, I'm just trying to help you guys in the community, because I know what this can do for a person, bro. Like making somebody's salary, like in one trade, like don't give up with this stuff, okay? So this is what it is, guys, and what we'll do is we'll play it out. I mean, obviously, you know, it did end up going in our direction like this, and this was just one of those perfect trades. But the patience of you actually holding the trade from here all the way up here, I'm going to show you guys something, okay? So if we take the little price range right here, date price range indicator, let's say from here all the way up here, that was 4 days and 8 hours. All the way up here, this is negative 61.8 TP. That was 5 days and 16 hours. If you got 5 days and 16 hours worth of patience, power to you, man. Power to you. Just let it ride. I know a lot of guys that have this sort of patience, they're not in the trades that much. They're not. If you're doing 1 and 2s, 1 and 3s, you got to come back to the charts, find another opportunity. All right, win it. Okay, be done. Then come back to the charts the next day, find an opportunity. You got to keep doing it. You're gonna be taking a lot more trades than the person who's just, you know, taking these sort of setups, being more conservative, and just, you know, taking their time and holding the trade all the way out. So just try and decide which trader you are, okay? But other than that, guys, if you did get any sort of value from this video, or just my videos and all, some of you guys are returning subscribers. Much love to you. Much love to my day ones out there that saw me start from zero, man. Much love to you guys. If you guys want to support my channel in any way, be sure to check out the super thanks button. It's right above the description, man. You'll see it. It's big. It's like a heart. You'll see it big on there. But thank you guys, man. And other than that, like always, I will see you in the next video.